Okay, 4.3, we're talking about source documents. It's page 136 to 144 of your textbook if you're following along. The things we're going to talk about are basically source documents, how to identify them, how to record them. We're going to understand that a source document is prepared for every transaction. We're going to talk about another principle, which is called objectivity, and we're going to understand why source documents are pre-numbered and everyone needs to be accounted for. This is in your textbook if you're following along. So a source document is any business form that serves as the original source of information for a journal entry and proves that a transaction has occurred. So in order for you to pay a bill or to deposit money as a sales, there has to be proof that it has happened. And that's what we call source documents. So when there is a cash sale, we are going to be giving cash sale slips. A copy is given to the customer, and then you keep a copy for your accounting department, and sometimes there's even a third copy that just stays in file. I think most of the time you would see that there would be two. Okay, and those are called a source document. So a transaction would look like this, a cash sale, and then at the bottom here would be the source document. And you notice that there's a number behind there. That is, everything's in chronological order, so you can go back and find out. If you need to look back at that, you can go and find it easily. Okay, so this is what a cash sale might look like. It might be something that somebody actually writes out. It also could be just a slip from the till as well. So that is an example of a source document for a cash sale. Okay, that just is explaining that there's sometimes 3 copies. The main thing is that you keep a copy for your company, and the person who you sold stuff to gets a copy as well. Okay, there's also a sales invoice. So this is when there's a sale that has happened, but it hasn't been paid for in cash. So you send a copy to the customer, and you keep a copy in your accounting department. And this is what it might look like. Okay, it has your company name, has who you are billing it to, tells you the terms. So this is how many days they have to pay it. It also has an invoice number. So remember that everything needs to be numbered. It has what they are buying. You can't really see this very well, but it has your totals and your taxes and your final due. Okay, so that's an example of an invoice. Okay, purchase invoice is when you, the business owner now, are going to go purchase something on account. So your transaction would look something like this. You're buying, it's a training expense. It's an accounts payable to Sane HR Consultants. It tells what you purchased, and it has the invoice number as well. Okay, another source document is a check. And checks are really important, and they are numbered. Sometimes your company will have big checks, and they will actually have a place where you keep a copy, and then the copy gets sent into the mail as well. Okay, so we don't really deal a lot with checks anymore, but if you were a company owner, you actually would. So as a teenager, you probably have never really used a check before, but this is what a basic check looks like. It tells what the company is up here, or whoever's writing the check, who they're writing the check to for the amount, and they spell it out, and then the numbers are here, it's dated, and you always have to have a signature. Okay. So if you were paying that, that's what your transaction would look like here. So it tells you what check you are paying with and what invoice you are paying. Checks received, same thing. Now your company is receiving a check, so there's a transaction that it would look like. And then when you go to deposit it, I don't think I have a picture of it, but when you go to deposit it, you would write it in your deposit book what the check number was that you received and what it was for. Okay, So here, received check number and what the invoice was. Okay, sometimes there isn't an actual source document for everything. Sometimes the bank just credits your account. They take money out. Sometimes if they take money out, they could be taking out for a service charge. And every person who has a bank account, unless you're a teenager, and you don't have, I think after the age of 18, you have service charges on your bank account. Up until 18, you're considered a student, and they usually don't charge you a service charge. A service charge would be every time you use your debit card or you write a check or you come in to get a service from one of the tellers or you want to deposit a check, that all costs money. Sometimes, though, if you have money in your account and it's an interest-bearing account, then the bank will put money in for interest. Now, you don't have any idea what those charges are going to be until you get your bank statement at the end of the month. Those are called memos. Okay, and just so you know, I already talked about this, that your source documents have to be pre-numbered so that you have control, you have a record of what has been going on. And principle of objectivity, this just means that there has to be proof that a transaction happened. I can't just say, oh, write me a check for $1,000, then I'll go pay that bill. The person who's writing the checks has to have proof of that bill and then has to have proof after that I've actually paid it. So that's the principle of objectivity. Okay, so there's a summary here in blue of your source documents that we've talked about. And then we've just added a couple standards and key concepts here as well for you.